Hi, this is Nilus Mattive from Money and Markets TV. This week, I want to do something special for my viewers and highlight one particular stock that sums up everything I love about dividend investing. And if you're a paying subscriber, don't worry. I've been recommending this stock for years now, and if you've been following my advice, you've already racked up significant gains. The company is Altria, the tobacco firm formerly known as Philip Morris. Since I first recommended buying it back in 2007, the stock has produced a total return of more than 58%, and it's up about 114% since I told subscribers to buy additional shares back in December of 2008. But even more important to its continued success is the fact that Altria has a long history of not only paying dividends, but increasing them. Right now, the yield on shares of Altria is 5.6%, far better than the rates you'd get from most bonds, and certainly more than any CD or money market fund out there. Plus, I would argue those payments are as secure, or possibly even more secure, than the income from the other alternatives. Think about it. Altria has much better cash flows and a stronger balance sheet than Uncle Sam does right now. But what's really instructive is a simple look at Altria's payment history. It's a bit tricky to follow because the company spun off an international division along with Kraft Foods, but the company has essentially raised its shareholder payments for 43 straight years. That alone is a strong indicator that Altria will not only make its future dividend payments, but also continue increasing them. If you had bought the stock just 15 years ago, you would have earned an effective dividend yield of 23.6%. That's more than 7 times what you could get on a 10-year Treasury bond, and enough to double your initial investment every 4 years. And it means that while other investors were busy chasing fast profits during the dot-com boom, only to see them go up in smoke, investors in steadily rising dividend companies like Altria have made out like silent bandits. Altria's recent history is just as promising. In the last year, it has produced a total return of about 34%, versus a 15% gain in the broad S&P 500 index. And over the last 2 years, it's returned 88%, while the S&P has gone up 45.5%. And over the last 3 years, as the worst market crash in recent memory unfolded, Altria still returned more than 29%, while the broad market lost 8.3%. The best part is you can get this type of return from a lot of dividend-paying stocks, not just Altria. As long as you buy into companies that are boosting their payments, your effective yield will keep going up, and there's absolutely no limit to how high it can go. So clearly, buying and holding so-called boring dividend stocks can produce some truly exciting returns. The trick is deciding which companies are right for your portfolio. I think Altria is still a great income stock, but it's not an urgent buy at current levels. The idea is that you want to own stocks like Altria, companies with long histories of steadily rising dividends, companies with strong businesses and brands, companies that are profitable right now and that will do well through good times and bad. When you invest in these kinds of companies and diversify your holdings across different sectors, industries, and even countries, you will have a portfolio that produces solid income now and will continue to grow your wealth and future cash flows with every passing year. I'm Nilus Mattive for Money and Markets TV. Thanks for watching.